Audio and social media as well. Well, lots of research has shown that there's a correlation between data on social media and company information, stock price, or market movements.
This is our 20-minute presentation reduced to 5, so we may skip a few bits and pieces.
Right. So we've got a great video we can come back to. But essentially the idea is that data on social media travels much faster than many other areas to transmit data. And this is just one of the research papers that's been started studying the correlation between social media data and market movements. They've got lots of complicated algorithms and whatnot to determine it. So far, we've been able to draw the data off of Twitter and ascribe value to the sentiment of the tweet. So is it a positive tweet or a negative tweet? And you get an overall positive or negative opinion. And essentially, what they studied here is just the correlation between the Dow Jones and how calm people were. So right before the bank bailout, the Dow Jones got a boost, but people's calmness started to go down. And as soon as that boost went up, it plummeted. So if you were looking at this calmness level, you probably wouldn't have been buying up at that peak. You could probably save yourself some money rather than just trailing the historical data following you down.
So this is a bit that kind of interested me when Joe first did his pitch. My background is business continuity and disaster recovery. So, and I've worked for a lot of investment banks around the world, so I know that markets move on major events and disasters. And these days, Twitter actually, you have all the natural disasters like fire, flood, droughts. The Twitter feed actually announces a lot of those disasters before the mainstream media does. So from my point of view, usually when a disaster's happened, I've been a little too busy to check my portfolio. So having something that was out there that would actually tell me what's happening. The other thing that drives stock price, of course, are company events, and a lot of those actually trend on Twitter first as well. An example is Google last week.
Yeah, so there was a slip in the earnings announcement for Google that Twitter found out about almost immediately. And a tweet started happening and it exploded. This is an imaginary trend line of what that market sentiment would look like. Obviously, if people realize it's a bad earnings announcement before the earnings announcement is supposed to happen, when all the analysts are expecting it, you're going to see the trend is going to spike abnormally before the earnings announcement. So if you can use this abnormal spike and decide, oh, something bad's going to happen to Google, you can get some sort of notice or purchase or sell, in this case, a sell order. And everybody else who's waiting for the news that announces it about here, and then when the analysts get a hold of it, the algorithms kick in, which was a very interesting, just absolute spike when all the mathematical equations said to sell, it sold fast. So if you were here, you could have cashed out before losing this 8% drop and $20 billion worth of shareholder equity.
And I own Google, and I heard about it 3.5 hours. So corporate traders have access to a lot of expensive tools. We found some. When we first started this, we were thinking that they would be perhaps one of our markets, but there's a lot of tools in that space already. Thomson Reuters, you could find out what the pricing was. It's on application, and there's not a lot of people around. DataSift, minimum 3K per month for their bronze package and 15K for their platinum. Derwent Capital Markets actually started trading purely on social media, and they pulled their funds and started, they moved all of their funds to social media based trading. And then they have an analyst tools as well. On the other hand, the personal trader has a lot less options. There are stock puts out there, which is a social media heat map. It's sort of limited to sticker tags, so hash $sign Apple. Raven is probably the closest thing that's out there, but it's more for managing brands and tracking stocks, and they want $99 a month for just professional one, $249 Enter us.
So essentially, a lot of that was our market information told us, and we want to give it a look at it.